Hello and welcome back to the WFC World Forum of Central Securities Depositories Conference, the 2022 year edition. We are delighted to welcome you back for this last day of the conference. But before we go deeper on how the last day of the conference will be, let us first see how the previous days of the conference were. Our first day was entirely dedicated to the role of the CSD for the local and global economy. The first panel has highlighted the relevance of the CSDs to be among the leading institutions in the sustainability in your markets. We have heard bright examples of how CSDs have been able to incentivize the issuers to go green, to disclose their ESG engagements, and about the role of CSDs in helping the investors to make green, sustainable decisions, helping the use of data. We were 60% to highlight the key potential impact of a CSD for ESG versus the data vendors or even stock exchanges. The second panel was dedicated to the possibilities of CSDs to connect from one market to another. And there we have been seeing beautiful cases of how CSDs were able to make an impact on the level of foreign investments in the emerging markets in particular, and how a CSD link can make a true difference indeed for the local capital markets and hence real economy. We have also spoken about the forces that are pulling us apart on the third panel. And despite those forces, the importance to pursue the efforts of the global convergence, having more scalability for investors and having more collateral pooling and liquidity, having more efficiency in the operational processes, such as compliance matters as well. And finally, we have been able to hear the updates of the regional associations from the 5 regional associations across the globe, and also hear some updates from the senior researcher at the EMF. On the second day, we dived deep into the understanding of the technology, and we have started with a variety of different technologies. And then, despite the very risk-averse nature of a CSD, we heard that one of the riskiest things for a CSD currently is not to innovate, which is a bit controversial, but at the same time, that's part of the conclusion of the second and third panels, right? So we saw the brilliant examples of how a CSD can engage in new asset classes, tokenize securities, and set up platforms for the transfer of title with finality based on distributed ledger technology. We heard also about the cold start problem and that even the regulation can be helpful for us to solve this problem. Departing from a CSD role, we have also discussed how we can be disrupting ourselves in full respect, of course, of the CSD role as an essential actor in defense of financial stability. Ideally, this can be done in full safety, in a fully regulated environment, providing protection to the investors with a DVP, preferably in a CBDC or tokenized deposits, such as commercial bank money can be in a tokenized form, and full clarity with regards to the liability aspects and performance of AML KYC tasks. So that's an ideal scenario. Of course, variances and different possibilities are possible as well, but that's what we have also discussed a bit during the second DLT panel yesterday. Finally, we have closed the day by discussing the cyber resilience matters. The day 3, so today, will be entirely dedicated to distilling the major trends and priorities for the industry. During this day, we will be able to hear from the CSD major stakeholders. We will be speaking about the business optimization, settlement cycles, and efficiency. And we'll also close the conference with a vision panel, gathering some of the most interesting leaders of the industry from the biggest CSDs Of course, well, many more also part of the CSD industry, unfortunately, who could not be present there. But today we will be able to hear one of the biggest CSDs, some of the biggest CSDs and market utilities worldwide. Again, I would like to encourage you to be very active, as you have greatly done it during the previous 2 days. Thank you for that. So please share your questions on the right-hand side chat that you are seeing on your screen, and then we'll be able to take on board some of your questions. We'll be also able to engage with you through the poll questions during the entire day as well. So now we will be starting this first day, and on the previous days, for example, on the day 1 of the conference, we have heard some questions about further cross-border efficiencies of CSDs. Here, I think we'll be able to dive deeper on this 3rd day of the conference on these matters as well. And as you may be aware, in the recent years, Euronext Group has expanded its services in the post-trade areas. And today, it has a strong step in the CSD business, in the CSD industry in Europe, with Euronext Securities based in Porto, Milan, Oslo, and Copenhagen. So now we have a pleasure of having this brilliant speaker today. So I welcome to the stage Anthony Attia, Global Head of Primary Markets and Post-Trade at Euronext Group. Over to you, Anthony. Welcome.
Thank you, Anna, and thank you for your kind words. I'm extremely happy and grateful to be part of the forum today. I also know that you had the pleasure to have other representative of Euronext in day 1 and I guess day 2 and later today. Thanks again for the organization to give us a stage and to invite us. As you said, Anna, we are Euronext is a newcomer in the post-trade world. We have the DNA of an exchange operator. But when you look back more than 20 years, we also have the DNA of post-trade and of owning clearinghouses and CSDs back in the days. I'm here in Brussels today in Euronext offices, in stock exchange offices, because I was attending another conference, which is of importance. It's the conference of the Federation of European Stock Exchange, the FESE, and I'm a vice president there. And before talking about Euronext approach for post-trade and for CSDs, I just wanted to share with you some of the comments that I've made this morning at the FESE about the European landscape, because I do believe that transforming the European landscape and making sure that European financial market infrastructure can play a central role is completely capturing the strategy around CSDs as well. And so let me read some of the comments. So EU financial market infrastructures play a central role in serving the real economy and providing capital to companies by delivering neutrality, transparency, reliable price formation, and risk management. Strong capital markets play a key role in economies as one of the most powerful drivers of growth and wealth creation. And in today's challenging and uncertain times, public financing is limited by high debt burdens, and bank financing alone will not be sufficient to cope with the political situation while ensuring the EU's autonomy, resilience, and competitive strength. We need to make sure that regulation reinforces rather than undercuts the EU strategic objectives. So obviously this was a targeted comment to EU policy makers, but we've been challenged by these policy makers to have some feedback about how can we drive together the agenda of a strategic autonomy in Europe. So we want to be independent from a strategic point of view from the US and from the UK. And at the same time, we acknowledge that we are part of a global market and global system. But I'm pretty sure a lot of us commented on the consequences of the COVID crisis. But it's also very true that the invasion in Ukraine is provoking significant tensions in our respective infrastructures, and it is increasing the systemic risks that we all have to manage, in particular with the sanction mechanism, but not only. We have to expect some unusual behavior of markets. We have specific volumes on some asset classes that are linked to that. And so this is a test for the whole chain. It's not only about trading platform, it's also about clearing houses, and above all about CSDs. A few words about Euronext. So we operate 7 exchanges in Portugal, France, Belgium, Netherlands, the Republic of Ireland, Norway, and more recently with Italy. We are so, as I said, we are a relatively new entrant in the post-trade world, but we with our 4 CSDs that Anna mentioned, we now the third largest European CSD operator, and this happened in just a few years. We have around 6 billion euros of assets under custody, so it's roughly 10% of the total EUC in the EU, and across all asset classes: bond, equity, funds, warrants, and certificates. We have close to 8,000 issuers and around 120 million settlement instructions processed every year. We also run a large CCP in Italy. It was formerly known as CCNG, and now it's called Euronext Clearing, because we are investing significantly in this clearinghouse in order to position it as a European CCP, able to clear all of Euronext market and more than that. And so in 2021, the post-trade business in the Euronext group represented 25% of our top line, roughly 320 million in revenues. So certainly, the Euronext is positioned as a challenger on that field with large incumbents, obviously, but with a critical mass to be successful in that space for the long term. We heard a lot when we entered that world of post-trade, which is your world. We heard a lot of comments about the fact that CSDs were not a growing business, that Europe was bound to consolidate, and people are questioning the sound approach to invest in CSDs. And we believe, in the contrary, that post-trade is one of the key elements of a well-functioning infrastructure in Europe, and play even more in this time of multiple crises. Post-trade play a critical role for the well-functioning of financial markets, starting with the listing business, with the primary market. It's not just about assets under custody. It's not just about settlement instructions. It's also about making sure that the post-trade chain participates to the effort to finance our companies, whether it's large cap or SMEs in Europe when they want to raise capital. We hear a lot about the pain of fragmentation of post-trade in Europe, with I think something like more than 30 CSDs. But we see that trying to resolve that fragmentation challenge or criticism by believing that there will be 1 or 2 large players is ignoring completely the key role of our domestic CSDs today. Their role is to connect local economies with global capital markets. And so CSDs, efficient domestic CSDs, need to be present on the ground. They need to connect with local ecosystem and local economies. And so they are, in effect, a gateway between local issuers, local investors, and obviously custodians with global capital market. And so it's all about servicing these clients, and it's all about respecting the diversity of our respective markets. Again, Europe is a particularly vibrant and dynamic area. It's well developed, but this fragmentation still represents some challenges for our client to navigate. In particular, because every CSD has their own systems and processes, and if you are a bank operating in multiple markets, this fragmentation creates inefficiencies in your internal processes. And so in the 1970s, one attempt to overcome fragmentation was to create international CSDs, which in effect are offshore platforms with a pure horizontal strategy. We believe that today the approach that Euronext has by creating a common network for our 4 CSDs, in effect a common governance, common risk approach, a common client engagement, but reinforcing local services, making sure we serve our clients for the best of their needs, is a third way, which is not the global consolidation with offshore platform and not the status quo of this extreme fragmentation. So we are taking on the challenge to connect our CSDs together and to grow them, and in the future, hopefully, to welcome more CSDs in this framework. Policymakers are rightly fostering competition with CSDR. That's I find quite efficient and quite successful, and T2S in Europe. So takeoff has been slow indeed, but the direction of travel is very clear and will benefit issuers and investors together. I'm saying that the takeoff of competition is slow because according to the ECB, only 5% of securities are eligible as central bank collateral that are eligible as central bank collateral are issued abroad, excluding ICSDs. And 1% of T2S settlement takes place between different CSDs in 2020. So hopefully these numbers will grow. And this will pave the way for a new approach to integrate European markets, not based on international CSDs, but based on networks of CSDs leveraging common platforms. We believe that an industry remains inherently local with a need for a strong local footprint. We also note that a few attempts have been made to create a kind of transatlantic expansion of EU and US players on both sides, but this has not shown to be working. Economies of scale and price pressure that are driving the change the same way they have and will continue to do so in the custody business, and status quo will be sustainable over the long run. So this network approach that we have at Euronext Securities is creating a very strong engagement with our client and the ecosystem, as I said, but it's also creating a path, and this is for the long term, because we don't see significant consolidation in the next 10 years, but it creates a path for a front to back infrastructure capable of dealing with open architecture. We are, as I said, what is important for us is to create intimacy with local ecosystem and market knowledge, and nurturing these local specificities create services and create efficiencies for our client. Now, a few words about technological change. Obviously, I can't conclude without mentioning DLT and digital assets. Are they really challenging the raison d'être, as we say in French, the corporate purpose of the CSDs? I believe if you put aside the hype and the religious aspect of the approach to DLT and digital asset, I believe DLT will become part of our software toolkit. Large DLT vendors are turning towards standard software providers, and so they talk less and less about DLT and more about standardization, which is actually something that we welcome. I think we will all end up running pieces of our technology on DLT going forward, which will actually foster harmonization and standardization for the benefit of our client and the benefit of our respective cost base. Now, one question I'd like to leave these comments with is: do you guys think that the DLT is challenging the consensus on omnibus account versus segregated accounts? At Euronext, we operate two CSDs with omnibus accounts in Italy and in Portugal, and two CSDs with segregated accounts, where we see the level of engagement of the retail customer in the Nordics, in Norway and in Denmark. This creates transparency, and this creates for the future further services to connect retail investors and investors in general to a more engaged governance with issuers, in particular with equity issuers, and it makes it much easier to look at general shareholder meeting, electronic voting, and supporting the engagement of issuers into the governance of our listed companies. Most DLT experiment the way to run a segregated account directly, and so this technology may support further development of the segregated account away from the omnibus account. So we will watch that very, very carefully. So, and we see that obviously as an opportunity, not as a threat. Looking at the future, and a few takeaways, because I think I'm running out of time. The economies of scale, I believe, will continue to drive consolidation and continue to shorten the value chain. We need a deep understanding of local specificity, especially at a time where local players are looking for these economies of scale in the custody chain, and where global players use large-scale offshore operation centers. By the way, in a few days, the Euronext exchanges will move their data center from the UK back to continental Europe in Italy. This is a very strong commitment as a European market infrastructure that we take to make sure that the data, our client data, and our key operation remain in the European Union. We believe that the future regulatory initiatives are key. They will shape even more these next 10 years, and we will look very carefully at the DLT pilot regime. And our mission at Euronext in this transforming time is to work with local and regional players to successfully meet their challenges and make local economies more connected to global liquidity and global capital market. I want to thank you, and I want to give the floor back to Anna for a very exciting panel ahead. Thank you.
Thank you very much indeed, Anthony. So all very interesting questions and insights from your side. Thank you. So now that we have heard indeed these introductory insights, we'll be perhaps keeping them with us eventually for the next panels. Well, not necessarily for the next upcoming one, but I'm sure that some of the speakers will be able to take it as part of the discussions on the business optimization, for example, or the vision panel with regards to the possible trends, right, and evolution of the post-trade area overall. But now, indeed, we will be entering into this next phase of our day-to-day, which is the first panel of the stakeholders of the CSD industry. So we will continue the conference with an exchange of stakeholders on their expectations and also on the areas of collaboration with them. The panel discussion will focus on the evolution of the CSD ecosystems overall and how we can be cooperating all together. how CSDs can be aligning with the needs of the different stakeholders between different market actors and FMIs. So now we are ready to welcome on this stage our first panelists, so the panelists of the first session. So I already welcome onto the stage Colin Parry, CEO of ISA, International Securities Services Association. Over to you, Colin.
Thank you very much, Anna. That was a great keynote speech, and I have views on the question about omnibus or segregated, but I'm not sure that's for this session, but I'm more than happy to continue that conversation elsewhere. So can I please introduce Florence Bindel? I think they should pop up. There we are. Florence is there. Nadini Sukama, Abdullah Jafar Abdin, and finally, Debbie Mercer-Miller. So first of all, we're just going to start with a very quick introduction. So as Anna said, I am Colin Parry. I am the CEO of the International Securities Services Association, and we work throughout the value chain, all the way from exchanges down to CSDs, issuers, and the end clients. So we've got quite a broad remit. And then Florence, may I ask you to introduce yourself, please?
Good morning. Thank you, Colin. Florence Bindel, I'm the Secretary General of European Issuers. As it's stated in the name, we represent European issuers, so the companies listed on the stock exchange in Europe. Our objective is to make sure that we have the proper regulatory environment for companies to tap into the capital markets, to grow and develop themselves overall. So thank you for the invitation.
Thank you. And Nadini?
Thank you, Colin. And what a pleasure to be here. We always make time at the WFE to join this forum. We represent exchanges and CCPs around the world, including standalone CCPs that are not owned by exchange groups. So I always like to remind you all, remind our audience that together WFE and the WFC, or the organizations collected within that umbrella, together represent the entire trading chain, from trading to the ultimate post-trade side. So indeed, I think Anthony Atia's points were very well made, and he, in fact, demonstrated why exchanges, CCPs, and CSDs live within the same universe and sometimes within the same group. I'll stop there, but we're global, and we can, trillions of dollars pass through our members' markets, and indeed our CCP members manage risk in billions of dollars as well. Pleasure to be here.
Excellent, thank you. And Debbie?
Thank you so much for inviting the Association of Global Custodians to be on this platform among such esteemed peers. The AGC, as we're known, the acronym, is a group of 12 financial institutions that provide post-trade services for institutional investors and intermediary clients that are global. We represent our members' common interests on regulatory or market infrastructure matters. So overall, our primary objective is to really help drive a resilient, effective, and efficient financial market. We collaborate with many associations to attain this goal. Thank you.
And Debbie, particular thank you because I think it's about 6 o'clock in the morning, if not earlier. So thank you for coming early on doors. And then Abdullah, finally to you.
Thank you, Colin. My name is Abdullah. I'm Chief Operating Officer in Bahrain Clear, which is a domestic clearing house. I'm also chairing the African Middle East Depository Association and currently a board member of the WFC. As Bahrain Clear is a domestic clearing house, we exclusively provide central depository and post-trade services. We do participate in the primary, secondary, and post-trade services as well. Back to you,
Excellent.
Colin.
Thank you very much. So as we start this panel, can I please ask the audience to ask any questions as we go along? So if there's something that strikes you as controversial or worth a follow-up question to understand, please put those in the chats, and that'll be passed on to us by Anna and Grace, and we'll try and get to those questions as well. But do not wait to the question and answer session at the end of the session, as generally people forget the questions that they're going to ask. So if we can ask questions as we go along, that'd be fantastic. So the aim of this session is really to talk about the expectations of the stakeholders throughout the value chain, and talk about how the cooperation works between the various parts of the market infrastructure. And we're looking at that along that whole securities value chain, and as I say, between all stakeholders. So we're not saying the world is perfect. There are definitely challenges, but I think there are more opportunities. So just to give us some context, ISA is a collaborative association like the WFE, ACG, and AMIDA. And we encourage cooperation throughout the value chain through the exchanges, CSDs, custodians, and the technology and consulting firms and fintech firms which support the value chain. In particular, for this audience, we've just recently formed a domestic CSD working group. And that working group focuses solely on the needs of the CSD community who may have less available resource than some of the very big CSDs. And what we do is we work together, and by cooperating and collaborating, we've managed to recently publish papers on remote working and operational resilience. And the next papers, which we started last week, are on remote network due diligence and the best practices for markets wanting to open up to foreign investors. And those groups are reasonably small and focused sessions, but both of those working groups are open to any CSD across the globe who wants to join. And the classic thing is, from my point of view, the more people we have involved, the more diversity of opinions we get, and the better outcomes we get from the papers, which makes it more useful for CSDs to engage both the domestic regulators, but also globally. So that's very key to us, to have as many CSDs present as we possibly can. I'm not saying that the success is guaranteed, but if we do have those conversations, at least we understand where the challenges are. So, Florence, with that sort of wide opening speech there, I guess it's a speech, what do you have and what your members have expectations from both the CSDs and the exchanges? And where do you think we should be able to collaborate more and be more successful together?
Thank you, Colin, for these introductory remarks. We have two main priorities, I would say, two main concerns for the issuers, that have been addressed over time by the regulatory environment. First, with CSDR, with the notary function ensuring the integrity of the insurance. This is the first one. And secondly, to guarantee the ownership rights as settlement is deemed irrevocable. This is quite important. Now, what we see recently in the recent developments, the Commission has published a proposal to amend the CSD's regulation. It follows the publication on 1st of July. And while concluding in broad terms that CSDR is achieving the original objective, it identified areas where they will need further improvement in cross-border services, access to commercial bank money, settlement discipline, and third country CSD. So most important issues for European issuers are the passporting regime and the settlement phase. So we welcome the changes to CSDR, including the simplification of the passporting requirements, the settlement phase, and issuers caution that mandatory buying may underpin the competitiveness of European capital markets. So they would like to see exemption for listed SMEs on growth markets from the settlement penalties and the mandatory buying in case of settlement phase. They are in favor more, I would say, of voluntary rather than mandatory buying approach, and not applied in events of SMEs that could be, where markets are more illiquid, and that's in such case believing that buying procedures could remain optional. So that's I would say first introductory comments. Thank you.
Thank you. And so in that, so I think from certainly the conversations I've had with some of the CSDs and the custodians, that they are very much aligned with that view of, you know, let's exclude parts of the markets and the SMEs being a particular segment from the buy-in regime because there's not enough liquidity, etc. So are you working with those constituents of the market to lobby with the EU to ensure that actually those views are understood to not just be the issuers' views, but also those of the CSDs and the global custodians and custodians themselves?
Yes, we are engaging, well, first, you know, with our members, I would say, across our constituents. You know, we have discussions currently at this moment. I mean, we are gathering our members in order to discuss more in depth the current, you know, proposal that is on the table. And definitely, I think it's important that those developments are discussed with all the constituents across the value chain, and it's very interesting to hear the views of the others today as well in this panel.
Excellent, thank you very much. So Nadine, you hear some of the asks above and what we've done or has been done in Europe and the work to still be done in Europe. But from the view of the WFE, what do you think issuers needs how they should be serviced, and how should that be done consistently and well across the globe?
Thank you. I thought it was really interesting. The things Florence said were really, really interesting. We come at it, obviously, from a global perspective. Europe is one of the regions that our membership service. And I am currently at our CCP conference, you know, the first in-person conference we've had, you know, since January 2020. So exciting times, really. The last time this particular group of our membership met was back in this time in 2019. And we've, if I may, if I could perhaps bring you some of the themes that have played out through that prism, I think, answer that question you asked me through that prism. In the last couple of days, we've spoken, I think, we've thought quite a lot. I mean, an abiding theme of the conference has been, you know, what's next? And I think that some of Florence's, you know, priorities and perspectives are absolutely, you know, front and center of our members' minds. In addition, there's a fundamental focus, which I think everyone around this table, this virtual table, shares around operational resilience. And I see all of you kind of nodding. All the market infrastructures, that CSD, CCP, exchange, have been very focused on operational resilience over the course of the pandemic, and coming out of the pandemic, fingers crossed, we are almost through it. And operational resilience and the challenges of the last 2 years, as you know, as we've all lived, you know, we all went out remotely, sometimes with very little notice. You know, from one day to the next, we went home thinking to come back in a week or two, and 2.5 years later, you know, we're back, but maybe a couple of days week. There are members in our ecosystem who are not yet back in their office. We have, you know, 8 members in China, for example, etc. But operational resilience has really been an abiding theme of the last couple of years and conversation here. And that touches on many of the things that I feel that Anna mentioned early on in her comments, you know, cyber, you know, remote working. You know, Colin, I think, you know, Issa is working very effectively on that topic. We have looked and thought a lot as well, I think, just around systemic resilience. So if you think how important that is for the issuers, for Florence's members, that during this time, public markets and the institutions that serve them, that's CSDs, CCPs, exchanges are able to remain open and support, issuers through this time. We've also, I think, been very focused on cyber. It's been a time where all of us, as institutions, have been thinking a lot about cyber, and we've been thinking quite a lot, as you can imagine, about technology. Not only about technological innovation. At the moment, it's been very fashionable to talk about DLT. I kind of agree with Anthony Antea's remarks about that, but just technological innovation, because the fact that all of us can meet around this virtual table, so effectively, from different parts of the world, we could always do that. But probably 10 years ago, it wouldn't have been as easy. So technological innovation and digitalization has brought us all around this table to a new place. So it's a new era. Certainly, and I won't give you a shopping list. I'll come back to it later in the conversation. But ESG is a focus, and corporate governance is a focus. And I hope that we'll perhaps have an opportunity to touch on that a little later in this panel, because certainly we're very interested to hear the views of others around this table about corporate governance. So settlement. To conclude, settlement, if you like, for our members, that's exchanges and CCPs, is something that at the moment is an issue. And I think that's perhaps further ground, because you opened with a call for collaboration and cooperation, two words that are very dear to us at the WFE. I think there is an area where we can all come together because it is certainly on our members' minds too.
Excellent, thank you very much, and we will, if we have time at the end, we'll come back to your ESG comment and corporate governance in general, because I think that is a very active discussion across the globe at the moment. So that's great, thank you very much. So Abdullah, if we move on to you, so taking the view of the many CSDs in the African Middle Eastern Depositories Association, how do you ensure the views of the exchanges and issuers are taken into consideration as the CSDs develop in your markets?
Thank you, Colin. We, as CSDs, whether in the region or on African Middle East Depository Association, we look at the stakeholders overall. So we look at, we consider the regulators, exchanges, clearing houses, issuers, creditors, the banks, because the creditors also are our stakeholders in case of the collateral management. The brokers, custodians, and the most important, the investors themselves. We, in the region, we have the segregated account structure where the CSDs and clearinghouses are directly dealing with the investors. At the same time, I would always say this phrase that for me to take their views, I put myself in their shoes. I personally worked with the regulator. I worked with one of the listed companies. I worked as a broker, as a custodian, but never were an investor, just to avoid any conflict of interest. So what we basically do, in case of any enhancement, in case of any regulation as issued, we first consult our stakeholders. We first consult the exchange. We first consult the when it comes to the listed companies. If I give you a live example, then when we looked at providing asset services, i.e. distributing the cash dividend, before we enforced the policy, what we did, we consulted the stakeholders, we consulted the exchange, we consulted the listed companies. We first took their views and any upcoming enhancement or implementation or initiative. By this, we collaboratively make sure that initiatives are implemented in a good manner and collaboration of all of the stakeholders. That brings us to a very successful implementation, and every single initiative taking into consideration, taking their views in advance and then implement the initiative. Back to you, Colin.
No, that's very good. So just taking that example you just used around asset servicing, were all the stakeholders' views aligned on how that should be executed and done, or were there differences of opinion?
You would definitely at the beginning get some resistance from the stakeholders, be it shareholders, be it the issuers. I'll give you a live example that when we tried to convert the cash dividend that's being distributed from bank to bank through IBAN, you definitely received few resistance from the listed companies for so many reasons. And also from some of the shareholders, because they always wanted to get their cash dividend in check. But again, the moment they try it, the moment they experience it, then it takes like a year or 2 years for them just to have this level of comfort. This also gets us back to when we converted the physical certificate into a DMAT, an electronic book entry. So the same example happened. You get the resistance from the beginning, and then in a couple of years. But we always also look at the international principles. We also look at the efficiency. We always look at the standard policies and procedures issued by, let's say, ISCO, by other colleagues, international organizations. However, the pandemic itself was a good live example that we needed to push, let's say, for the e-voting. We needed to push for the virtual meetings. And we hope very soon to meet when it comes to the conferences physically, because we know that there are lots of advantages that when we physically meet for this kind of marvelous international conferences. Back to you, Colin.
Thank you very much. Yes, we had the ISA symposium in Madrid last month now, and that was extremely good, as you say. Getting people together again in physical form meant not only did they listen to the content, but they had those various conversations offline, which were equally useful for people. So, Deborah, the global custodians interact with many different CSDs across the globe, right? As well as a large number of local intermediaries and local custodians. Where are you seeing the opportunities to collaborate? And if you can also talk a little about the challenges you're seeing, that'd be great as well.
No, thank you for asking that question. Challenges typically present opportunities, as you said earlier. I would like to give a little context before I get into answering this question. So overall, what I stated earlier was that the Association for Global Custodian, our objective is to help drive resiliency, effectiveness, and efficiency within the financial market. So we initiate market changes, we advocate, we collaborate with other associations to improve the overall financial market for post-trade services. So this is accomplished by discussions to attain common understanding, issuing comment letters, or having thought leadership discussions with other industry groups or regulators. However, we represent one constituent in the overall linkage of the financial market. So we have heard the term collaboration and cooperation mentioned a few times earlier, and that's extremely key because each institution has its own secret sauce. But I think that we would all acknowledge that there are numerous opportunities wherein we have common interests and functions, which needs to be standard. And it enables us to make the market more resilient and efficient when we all come together and to discuss these points. So where there are challenges, there are opportunities, and by us collaborating and have alliances, we then will be able to better mitigate the risk, increase efficiency, create standards, speed up international and national financial transactions. We're able to increase stability and promote overall market growth. So when a decision is made upstream, for example, with an issuer or anywhere in the financial flow, we know that that decision will impact downstream. So it will impact other custodians, the global custodians. It will also impact CSDs. So it's very, very important for us to basically collaborate. And this forces us basically to work together in a more cohesive and healthy way. And a prime example really is around T+1. I know that this was touched on or discussed in one of the earlier sessions a few days ago. And when we look at settlement acceleration initiative in the US, this is a very complex initiative, but it's very much needed because we all know that it reduces systemic market risk across all the counterparties. And equally important, it also reduces the margin requirements for defaults across DTC members. But in essence, clients will have a quicker access to cash. They'll have a quicker access to securities. They have quicker access to other information, which provides the foundation for new products and data management. So in the example wherein we're pushing forth with the initiative on settlement acceleration, we have several associations that have been involved. DTCC being the market utility, SIFMA, ICI, and the AGC also has been attending a lot of those calls. But ICI, DTC, and SIFMA, they basically have convened the stakeholders across all constituents, including the buy side and the sell side. They evaluate and they analyze all the functions. And this includes like having deep conversations about flows, about operational resilience to absorb such a change, about the operational model, about the various products and services which are impacted. Heard mentioned earlier asset servicing, that was one that was discussed. We looked at the current state. But what is quite evident is that stakeholders are at different level of automation within their respective institution. And this presents a degree of fragmentation across the market. And this had to be given serious consideration. So the stakeholders and the constituents, we have to discuss solutions and standards and best practices that are driving economics of scale. That was very important. And while we're having these discussions, we have to take into consideration that there are hundreds of millions of dollars that are being injected into the US each day from investors in Europe, in Asia, and elsewhere. And we have to take into account time differences, repatriation that's happening, and FX. So we have to assess, what does this mean? How does it impact us globally? Because most of us are all global institutions. So those are some of the challenges that we had to discuss and find solutions that will work for the betterment of the entire financial marketing community.
Well, that's a long list, and I still remember when I was working in the US, the retail investors sending checks as well, which is again in the post is not going to be a T1 thing. So there are many different aspects of that, and I believe there's a panel later on today about moving to T+1 as well. So we'll go into the more depth of those conversations there. So we have the question from the audience, which I'm going to ask very generally, and whoever feels brave enough, feel free to start the conversation. So the question is, how does CSDs, global custodians, CCPs view the crypto assets and DLT regime? And so that's a very wide question, but does somebody want to start with that one?
I'll go.
Yeah,
And let me give you both the CCP and the exchange view. They are linked. So I think crypto assets and the DLT regime, crypto assets, let's be specific. It is another asset class. We don't see another asset class come along every year. So it's an exciting opportunity. It's brought a generation of investors, to awareness of the enormous potential and benefits that investment can have in changing lives, right? So it's great. There's a whole generation that was perhaps disenfranchised by, felt Wall Street was not for them, who have understood that investment it's a tool for financial inclusion. However, and this is really the heart of the question, what is the appropriate investor protection regime? And everyone around this table is highly regulated, represents industries that are highly regulated. We don't want to be unregulated. We all have investor protection at the heart of our businesses, and that includes the issuers. So there needs to be a balance. I mean, certainly every exchange in the world that we speak to is keen around crypto. They see it as an opportunity rather than as a challenge. And similarly with DLT, as an industry, both the exchanges and the CCPs are thinking and working to maximize, to utilize the opportunity that it brings. But along with that, there's, perhaps a heightened perception that we need to communicate, and I say we collectively around this virtual table, about the responsibilities that others have. So, for example, let's take it an event, geopolitical event that has happened recently, and I speak, of course, about the invasion of Ukraine. So, for all of us around this table, it was a very serious, profoundly impactful event, not only for the human tragedy, but because of the consequences, for our industries. And so to wake up in the morning and to hear a lot of some of the crypto crowd saying, well, sanctions aren't for us, we don't believe in that sort of stuff. I mean, all of us around the table are living, the navigation of that. How do we operate and ensure systemic resilience, orderly markets, that giving investors, issuers an opportunity to continue to tap into capital markets in the midst of such a kind of difficult and turbulent time. So the investor protection aspect, I think, is very important. From the CCP side, there is a great debate going on at the moment, playing out specifically in the US market, but with consequences for the rest of the world, around the appropriate model of clearing, triggered obviously by one crypto platform. They're not a crypto exchange, they're not licensed as such, but a crypto platform bringing forward a new clearing model. And I think, those are some of the issues that we are focused on. How do we bring crypto into a safe space so that it is safe and as well as kind of inclusive? We want to make it mainstream, I think, all of us around this table. Let me hand over to other panelists now.
So Florence, have you got a view from the issuer side and the conversations you've had with your members about issuance in tokenized securities?
Well, the question is whether the current regulatory environment is compatible with the use of the DLT, actually, and it might require some clarification as some of the regulatory requirements. For instance, the securities ownership validated through a trusted party, how this will apply. I mean, so for the moment, I would say we don't think it might necessarily fit the settlement system taking place because there is this trusted parties. So how the current existing regime can accommodate the DLT reference in the legislation might need to be adapted and needs further discussion or changes.
Yeah, I think that's very true. And Abdullah, can I go over to you from a view from the Middle East and Africa?
I would agree with Nandini and the rest of and Florence as well. I think it's an opportunity. We have seen in the region that regulators and policymakers were very keen just to have the service provided by local international service providers. However, this is my personal point of view. We know it's a very risky instrument, especially with the culture in the Middle East. We need to really focus more on the awareness. So investors, they have to be very careful. And usually, and this is a habit in the region, that they always pinpoint on the market service provider, be it a regulator, exchange, and also the clearing houses. So investors, they have to be widely educated. And we know It is a very risky class of assets, and then it has to be there. It has to be provided. However, the investor awareness is really very important. This is my personal point of view.
I think I can echo that. So I experiment at our household. I have four, variously 24 down to 16-year-old children, who one of whom certainly deals in crypto assets. And on the back of the Coinbase commentary a couple of weeks ago, I asked him where they were custodied, and he had no clue. And I think that lack of education is not just my son, who actually works in the financial markets, but many people who are investing them do definitely need further education about where they are and what they're doing.
Colin, if I could just say at that point, one of the things all of us around this table have learned is that people care when things go wrong. And then once trust is lost, it's very difficult to recover.
Yes, I think that's true. One of the IS has obviously been involved in DLT for a while now, and we have written 2 papers on the difference between the theory and the practice of DLT. And what they're really written for is to help the fintechs and those who are new to the industry understand that basics of control and how you are in as good a position as you possibly can be when something goes wrong. And that's the next paper we're going to write, is around that crypto custody and what we think the best practices look like, just because we think that education is a key thing for everybody to have. And we think that having firms like yourselves in that mix and helping design what that paper looks like will save us as an industry losing that trust if we can do it properly. So I think that's a very good point. So from my point of view, we've probably got time for one more question. Is there a question from the floor? Grace, have we got another question from the floor or not? Apparently not. So Florence, I'm going to start with you again. Where would you like to see the collection of firms represented around this table? Where would you like them to see improved services from an issuer viewpoint?
Yes, thank you. Well, actually, one of the areas where we would see improvement is the cross-border CSD services, and particularly, looking at the competition aspects. The passporting principles allow CSDs to provide core services across the EU. However, the interest for issuers is really, especially for SMEs, to stimulate competition for settlement services between CSDs. The new regime, which is currently on the table, proposes some simplification in the passporting process by removing the possibility for the host supervisors to refuse the passporting and replacing it by a notification from the home supervisor to host supervisor. And also it shortens the period from 3 to 1 month, under which the home supervisor shall communicate the passporting request. So the process actually is quite long. And could create entry barriers that we have noticed. So we welcome the simplification to the passporting requirements for CSDs. That we think they will minimize the barrier for cross-border settlement and also reduce the administrative burden and overall the compliance cost.
Excellent, thank you for that. And Abdullah, you used the word complementary when we met previously to describe the FMI behaviours around your sphere of influence in Bahrain. Can you just give us some real examples where collaboration and cooperation are working and good for us? And you've got about a minute.
When Bahrain Clear was first established, all right, so when Bahrain Clear was first established in 2017, prior to that, we were like a division within the stock exchange providing CSD services. What happened? So we had to take over some of the existing onboarding, market entry, and post-trade services from one of the existing paying agents. So someone saw me sitting with the counterparty. He said that you guys are competitors. And I looked at him and said, we complement each other. That word just came out of my mouth. And I think, yes, today, even if we look at this event, we are all competitors, but we complement each other when we get together as a CSDs and clearinghouses to exchange knowledge. And also, we complement each other when there are cross-listing between jurisdictions among the WFC members. We complement each other when there are cross-border settlements that happens. We have live examples in the region. We have lots of cross-listing happening. And Gulf Country Cooperation, the GCC, we worked on unifying the rules and regulations, and also the trading hours and procedures that is happening, because we the foreign ownership in our jurisdiction is open up to 100%, and we have all of the nationalities across the world that are investing here. So we had to really sit and complement each other in order to have the capital market services provided to the stakeholders and investors happens and implemented in an efficient manner.
That is a perfect conclusion to our panel. So Florence, Nadini, Debbie and Abdullah, thank you very much for your time. I think we're a minute over, but not too bad. Thank you very much.
Thank you very much, dear Colin. Thank you, panelists. So that has been a very, very useful and insightful exchange from your side. Thank you for that. Certainly on many of these topics we will pursue the discussions, and I already take note of many of your demands and will certainly be pursuing the bilateral discussions and on the standardization of DLT processes and on settlement cycle, where we will be having a dedicated panel later during the day. And certainly as well with Florence Bondel and her members on the passporting and the simplification, where indeed we have these joint concerns as well. Many other discussions and topics also certainly require that we discuss them further, but let's do it bilaterally or in the second part of this day today. And we'll pursue then after the break. So we'll be now taking a short break of 15 minutes and we'll be coming back to you with the next sessions. So the next one will be about business optimization and ways to scale up. Afterwards, indeed, this session on settlement cycles, and we'll end up with a vision panel. Thank you. So looking forward to having you back after the break in 15 minutes.